The S&P 500 just gained over 6% over the last 4 weeks. We're going to discuss exactly what this means and if we believe that there's a need for a greater pullback at this stage. At the end of the video, we're going to reveal what the most persistent stock market trend is right now and why we all need to respect it for as long as it exists. Okay, so what happens after gaining at least 6% in 4 weeks? Well, we went back about 4 years to June 2020. Now, we know this is a small sample size, but considering we've had uptrends, downtrends, bull markets, bear markets since that point, it gives us a good indication of what could possibly occur going forward, at least what we've seen up to this point. And so this now is the 13th different time the S&P has that 4-week rate of change of at least 6%. Actually closer to 7, but we're using 6% just to get a number of instances here to work with. So as usual, we're using non-overlapping instances so we can get to the crux of what's really going on. And so let's look at this more closely. As we can tell here, the periods colored in blue give us an indication that the market continued higher. So it was a good time to buy even after we had that 4-week advance of at least 6%. In red, not so much. Now, no surprises to see that occurred in 2022. But as we can tell, in September 2020 and then in February 2023, we had pretty substantial pullbacks, even though the uptrend still had longer to go both times. As we recall, this was the first of 2 10% declines in 2020. Again, didn't feel good and didn't pay off to buy this. For a few months later, similar story here of last spring when we know we topped out right at the beginning of February of last year and didn't get back to those levels until the end of April, beginning of May from that standpoint. That's important to consider. Also, we have the current period colored in yellow here. Also, the period here, this is right around November 2021. So recall, the S&P had just pulled back about 6%. So pretty substantial pullback in terms of what we hadn't seen before at that time, because 2021 was really consistent. And we just higher highs, higher lows. Anytime there was a small dip, it was easily and quickly bought, and the market continued higher, new highs, so forth and so on. So the same thing occurred here, new highs again, consolidated, and then made a new high once more right before the end of 2021. And we know what came next, 2022's bear market. And so again, after rallying from March 2020, and so right now we started, as we know, in October 2022. Right now we're in May of 2024, a very substantial rally, say close to 30% even from the October 2023 low. So we know what we're getting at here. Is this a similar story where we've gone a good amount of time without a major pullback like what we saw in 2021? So we're not suggesting by any means that bear market is coming, but just keep in mind that because we just had 6% decline doesn't mean we can't have another one of similar or greater magnitude at any point, right? The point is looking at everything independently and seeing if we get enough signals to suggest something is changing again, which we're going to do for the rest of this video here. And so in terms of trading channels, right, we know that the market has been advancing within this larger trading channel all the way from the October 2022 low here. And within that, there's 5 different smaller channels now. The 5th one just being constructed from the most recent low in April. So as we can see here, this one at the moment is the shortest of the 5. It's also the steepest as well. And so what does that tell us? This is probably going to morph into something else before it's all said and done, just because it's only been a few weeks old. Now, the most important part about this channel is where it started from. And that is in the midpoint of the bigger channel. In other words, it did not have to go all the way back down to the lower threshold as 3 to the last 4 did. The only other time this did not happen was in December 2022. Again, not too far from the low, but that produced another rally, as we know, that went until early February. The last part about this to consider is that each one of these bigger pullbacks that we've seen over the last year and a half started after the S&P hit the upper threshold. Now, sometimes it was immediate. Again, back here in February 2023. Sometimes they extended a number of weeks like we just had happen in March and April 2024. So drawdowns, as we know, the market is coming back from a drawdown of just over 6%. And from this angle, judging it by the biggest drawdowns we've seen since the low in 2022, was the smallest of now 4 of them, where we had that 11% decline over 3 months and then 8 and 9% from late 2022 and early 2023. So from this perspective, again, coming after a very substantial rally, is this pullback enough to really reset the market and consider that we could have another larger up leg? Well, we were asking that same question, if you recall, all the way through this advance up to the point where we topped in March, where market only got between, as we can see, 1 to 3% lower from a high at a time. So the chatter there was we need to see something bigger. Even 4, 5, 6, 7% would do the trick. It did the trick, as we can tell. Market was down 6%, turned on a dime, and now slingshot higher by 7 to 8%. At this point, new highs, new breakouts, so forth and so on, because we needed all that to occur, as we discussed, for more bullish patterns to form, which are now being taken advantage of. So in terms of rallies, we just talked about it, say up 7 to 8% right now. So from this perspective, much smaller than the previous up legs we've seen since the lows. And if this did reset the parameters here, then this means we have much more to go in this up leg if this is part of a much bigger bull market run, right? And so putting them all together, as we can tell, right, we frame this in terms of just the biggest moves here: 20% rally, 20% rally, 28% rally, 7 to 8% rally, which again is not close to what it is. The most important part about this chart is knowing what came after those extensions, where the pullbacks were smaller than the preceding advances, which creates higher lows, higher highs, and a long-term uptrend. And so we know it's going to take different shapes, it's going to extend longer in different instances here, but in general, that's what we continually want to see, right? Just in terms of having the bid come in, create a new high, have new bullish patterns form, repeat the process over and over again. And so we always get a sense of how this is going, getting back to the crux of our analysis, the patterns, right? And so in terms of bullish patterns, finally needed, as we talked about, pullback to get another formation back in front of us. And that's what happened here. We have this cup and handle pattern, which formed right underneath the 50-day moving average, saw the breakout, already hit its upside target right near 5,300. And so with that, ended up being the 6th successful bullish pattern we've had since the lows. And we talked about these all the way up, 5 straight bullish patterns, 5 straight successful targets acquired. Had to wait this time for this one to occur, but once again, an upside target was hit. And because of how the comeback has played out, another bullish pattern is formed as well, and this one has a target near 5,500, right? And so extending a little bit further from the breakout zone right now gives us a little bit of wiggle room. Now we know not every single one of these is going to work out, but so far they all have. And the point being is we need to see the majority of them work for us to have the uptrend continue to persist. And so with all of that, the 6,100 target continues to be in play. Again, we don't expect this to be hit anytime soon. The most important thing that's happened over the last number of months is that the breakout zone has not been violated, right? And so long as we have that continue to happen, then this upside target will continue to be in play. So as we know, what is another very important part of an uptrend? You know that bullish patterns need to work and bearish patterns need to fail. And so this one failed. And this one looked very interesting as it was set up. You know, we've analyzed this here in videos where we knew, you know, the pullback came, it actually bounced where we needed it to, but with that bounce, there was always the chance that we'd have a lower high. And with that initial rally getting back to, at the time, a flat 50-day moving average, knowing and also knowing how things failed last August and September, it looked ripe for a rollover. Well, as we know, that didn't come, and the market really hasn't slowed down since that point. And so for this to have been completed, so to speak, we would have had to undercut this low to confirm that breakdown, and then obviously have the market move much lower to achieve that downside target. All that did not happen. Should that surprise us? Not really, because what has continued to happen all the way from the October 2022 low? Bearish patterns have continued to fail, and some of them have been bigger in nature. This one may not have seemed as big, but look at how similar it looks to the prior ones. And so what is the most persistent trend in the stock market right now is that bearish patterns have not been successful. And that's why we try to be patient when we have overbought readings, when things pull back a bit, so forth and so on, because the biggest bear markets or the biggest reversals always have the presence of bearish patterns working, of topping formations, breaking down, quickly achieving targets, so forth and so on. Now, again, this will never allow us to nail the top, but using this strategy all the way from the beginning stages of the comeback has kept us on the right side of the trend, and that is obviously the point of what we're doing here. That's it for today. Check out these videos and subscribe, and talk to you next time. Thank you.